Apple just reported $143.8 billion in revenue, up 16% year over year. Best quarter ever. iPhone up 23%. Services up 14%. EPS hit $2.84, up 19%. But the stock reaction was muted, down about 0.15% after hours. Here's the thing. Apple also said they're constrained. Not just tight on inventory, actually constrained on the advanced chip capacity they need to meet demand. And they couldn't tell analysts when supply and demand would balance. On top of that, management said memory costs are rising and should be a bigger margin headwind next quarter. So you've got record revenue, record cash flow, and a product cycle that exceeded their own expectations. But you also have a supply chain bottleneck and cost pressure that could intensify. Wall Street heard both stories and couldn't decide which one matters more. By the end of this video, you'll understand what the numbers say Apple is optimizing for, and what to watch next quarter to see if the strategy holds. Let's start with what actually changed. Before we look at the numbers, there are three things from the call that change how you should read this quarter. First, Apple said they exited December with lean channel inventory because iPhone demand blew past expectations. They sold so much so fast that they're now in what Tim Cook called supply chase mode. Second, the bottleneck is specific. Apple tied the constraint to advanced node capacity, the most advanced chips used in their latest silicon. They also said there's less flexibility in the supply chain than normal right now. Third, Apple highlighted the expansion of Apple Intelligence and said they're collaborating with Google around foundation model capabilities, including a more personalized Siri. They didn't disclose financial terms, but it's a notable strategic collaboration they chose to call out. If you only track the top-line beat, you miss what's happening underneath. Apple is growing fast, but doing it through a mix and margin structure they're clearly trying to protect. Now, let's see how that shows up in revenue. Let's talk revenue, because this is where the story becomes obvious. Total net sales came in at $143.8 billion, up 16% year over year. iPhone came in at $85.3 billion, up 23%. In the 10Q, Apple explicitly says the iPhone increase was driven by higher net sales of Pro models. And this wasn't just a US story. Apple set December quarter iPhone revenue records across multiple geographic segments. Greater China grew 38%, with management pointing to iPhone as the primary driver. That's the strongest China growth Apple's seen in years, with management calling out record upgraders and double-digit growth in switchers. When iPhone is driving record growth in the world's largest smartphone market while premium demand holds up, that isn't a macro tailwind. It's execution. Services hit $30 billion, up 14%. Also a record quarter. In the filing, Apple attributes services growth primarily to advertising, the App Store, and cloud services. And with an installed base, Apple says is now over 2.5 billion active devices. That services engine has a massive foundation. Then you can see what didn't lead the quarter. Mac, $8.4 billion, down 7%. iPad, $8.6 billion, up 6%. Wearables, home and accessories, $11.5 billion, down 2%. So the growth is concentrated where Apple's ecosystem flywheel is strongest. iPhone plus services. Now the question is, what did that growth cost? Here's the part the market can't ignore. Profitability didn't crack, it improved. Apple's total gross margin was 48.2% this quarter. Products gross margin, 40.7%. Services gross margin, 76.5%. In the 10Q, Apple says products margin improved primarily due to product mix, partially offset by tariff costs. And services margin improved with higher services net sales and mix. Cash was just as strong. Cash generated by operating activities, $54 billion. The earnings release frames that as nearly $54 billion and says it enabled Apple to return almost $32 billion to shareholders. To put that in perspective, Apple bought back $25 billion of its own stock in one quarter. That's more than most companies are worth. And they still had cash left over to pay $3.9 billion in dividends and increase R&D spending by 32% year over year. But here's the trade-off. Operating expenses rose. Total operating expenses were $18.4 billion, up 19% year over year. And R&D was $10.9 billion, up 32% year over year. Where's that R&D money going? Apple called out AI infrastructure, chip development, and the Google collaboration on foundation models. This isn't maintenance spending. This is Apple building the next platform. So Apple is expanding margins and increasing investment. That's why this quarter is a puzzle. How can they be constrained and still expand profitability? Most coverage gets anchored on one question: when do constraints end? But the filings show something else. Apple just delivered a record quarter where iPhone growth was driven by higher Pro model net sales. Services grew double digits with extremely high margins, and the company produced nearly $54 billion in operating cash flow. So even with supply bottlenecks and expected cost pressure next quarter, Apple proved something important. They scaled revenue, expanded margin, and generated record cash flow at the same time. Here's why that matters. Constraints usually crush margins. When you can't meet demand, you either sacrifice price to prioritize volume, or you sacrifice volume to protect price. Apple did neither. They sold what they could build, protected mix, and expanded profitability while doing it. That doesn't remove the risks. It reframes what actually matters. The market's question is, how many units can they ship? Apple's results suggest the more important question is, how much profit and cash can they generate while the ecosystem keeps compounding? So, how do you test if this continues? Next quarter, I'm watching three things. First, iPhone revenue level. If iPhone stays elevated while Apple is still constrained, it suggests demand and mix are still strong. Second, services growth rate. Services was $30 billion, up 14% this quarter. If services sustains double-digit growth, it confirms the installed base is still monetizing. Third, gross margin resilience. This quarter gross margin was 48.2%. Management warned about rising memory costs affecting next quarter's margin. If margin holds up anyway, that tells you Apple is successfully defending profitability through mix, pricing, and leverage. We'll come back next quarter and see if the numbers back this up. If this breakdown was useful, subscribe for more. Here at Show Me the Numbers, we read the report so you don't have to. And we focus on what the numbers actually say. No hype, no predictions, just the numbers. Thanks for watching, and I'll show you the numbers in the next one.